Let's move on and talk to Nilesh Kambli, CFO of Star Health, who's joining us on the show. Nilesh, morning. Thank you very much for your time. Ever since your con call has happened and after a very good set of earnings, everybody on the street is talking about a potential price hike, which is lurking right now. You're considering it or may have already taken it. Can you talk to us about what is the quantum and how much is on the cards?
See, basically, what we do is we monitor our products individually, and whenever a product reaches a certain loss ratio threshold, we go in for a price increase. So, as we speak, there are two products where we are considering a price increase, which constitute around 13 to 15% of our portfolio, and the price increase can be anywhere between 15 to 20% range.
But Nilesh, given then the combination of volume and price impact, would you relook at your FY24 guidance by any chance? Because, the earlier guidance for the loss ratio was at about 63 to 65%.
That is what we have said. During Q2, the impact of fever and infectious disease was slightly higher than our comfort levels. We have given a guidance that the overall loss ratio might be pushed slightly higher. And we're working towards it. There was a slight higher impact of epidemic in October as well.
Mm-hmm. Okay, so what's the growth overall right now in the industry and how much are you growing compared to the industry?
Okay. So retail health constitutes 92% of our business. So when we talk about growth, we talk about growth in retail health. Industry is growing at 18% for first half of the year, and Star Health has also grown by 18%. So we are in line with the industry growth rate.
Landscape from your peers, we understand that players like Care Health also are showing very good growth, at least the numbers are speaking of it. But again, it's a sector which is kind of from fewer larger player doing very well. So can you talk to us about some of the competitive landscape factor that you're facing?
See, as we speak, some of the players are really small. So the base is lower, and industry is growing at 18%. What we have also done is, we have tightened our underwriting practices. We have reduced our business in some of the loss ratio segments. So the growth that we are doing is by choice, and design, not by chance. So it is in line with our strategy to have good long-term profitable growth in the segment. So we are very happy with the 18% growth. In the second half, again, we are looking at a 20% growth. We have invested a lot in our digital banca channels. Banca today, we have around 44 partners. That business is growing at 50% plus. Digital business is really doing well. Today, it's growing at around 40%. So along with agency, we are focusing on banca digital channels. We are also focusing on rural business. We have opened 750 plus sales manager stations in rural parts of India. That infrastructure is also coming up really well. The idea is to open 1,000 plus branches in the rural segment. So rural digital banca, we are creating that infrastructure which will ensure that we continue to grow at 20% plus over the 3 to 5 year period.
But I just wanted to come back to the point when you talked about, the hospitalization, etc., being higher even in month of October. So do you expect the loss ratios to continue at the higher level in Q3 as well? And also in terms of your combined ratio, it worsened to 99% in Q2, higher than the guidance that you had earlier articulated at 95%. Do you see yourself going back to that 95% level on the combined ratio?
See, the 95% guidance is for the full year. There is seasonality when it comes to loss ratio and combined ratio. Quarter two, there are typically higher impact of fever and infectious diseases. This was the case last year also. Last year also, the combined ratio was upwards of 98%. So Q4 is typically the best quarter where we have a lower impact of infections as well as hospitalization. So on a quarterly basis, there will be some highs and lows. What we spoke about is it was slightly higher than the level at which we are thinking about. Quarter three, as we said, we are watching it closely. We are seeing some impact reducing as we speak. But we would not like to give any guidance per se for the loss ratio for the whole year. We are in the middle of the year and we are working towards the claims ratio.
Nilesh, if composite license actually becomes a reality, do you think it will help you widen your portfolio, move towards ULIP or even term plans? How much business sense would that make for you?
Yeah, so as we speak, there is no such proposal. It was, it will take some time before it actually materializes. We believe it is at least 3 to 4 years away. But if it comes or whenever it comes, we see it as a big opportunity. It will be complementary to our existing health insurance business. We would like to increase our portfolio in the protection business because that's a natural extension of health insurance business. We are not very keen on ULIP plans or something.
Point taken. So that's the latest coming in as far as Star Health is concerned as well. Thanks so much, Nilesh, for making time and speaking with us.